Hey everyone, Colin here. We're running a short survey to get better information on who listens to the show, and we're giving away free block space gear if you fill it out. If you find value in our shows or listen consistently, you can do me a huge favor and fill out the form. It takes about 30 seconds and helps me and the block space team keep the show running. You can find a link to the survey in the show notes. Thanks. What's up, y'all? Welcome back to the Mining Pod News Roundup Edition. You've got the usual cast of characters and special guest, Ben Harper of Luxor Technology. Ben, thank you for joining us today. How you doing, sir?
Doing great. Thanks for having me, guys.
Yeah, absolutely. We will have Ben sitting in on some of the stories today. We will also be grilling him about what's going on, or rather what is not going on in the mempool with transaction fees, and also taking a look at what hash price traders are looking at with regards to curtailment as we enter the hottest window in the US. Today's show is brought to you by Fractal Bitcoin, but we'll learn more about them later in the show. For now, let's get right into it.
I want to take a second and talk about Colorado Air Filter, a new sponsor for the Mining Pod and a major supplier of air filtration systems for Bitcoin mining sites. Colorado Air Filter is currently running a summer sale on their inventory. From Mervate pleats to HEPA filters, shipments to installations, containers to retrofitted buildings, Colorado Air Filter has it all. Here's what one recent major miner had to say about working with Colorado Air Filter. Working with Keith and Colorado Air Filter has been a seamless experience from day one. Their filter media consistently meets the demands of our Bitcoin mining facilities, ensuring reliable airflow and equipment protection. Keith is responsive, knowledgeable, and understands the unique operational pressures in our industry. We value both the quality of the product and the outstanding service they provide. Units are ready to sell. Contact sales at coloradoairfilter.com using code MININGPOD to claim 15% off today. Again, that's sales at coloradoairfilter.com with code MININGPOD.
Let's go ahead and throw it over to Difficulty Weatherman Matt and get a look at what's going on in the mempool and on the Bitcoin network. Matt, what are we seeing out there with regards to hash rate, difficulty, and hash price?
Hash price is hot right now. We're at 60, actually maybe a little bit north of 60, and that's dollar per petahash second per day. So I think everyone's pretty pumped out there right now. I mean, this is, I think, just below the high for the year, which we were very briefly at in the beginning of January. And that's largely due to we broke all-time high as the time of recording. This was yesterday, July 9th, in Bitcoin price, as well as we had a just huge difficulty adjustment decrease the last time around, about 7.5% downwards. Unfortunately, though, I hate to bear bad news. We are about to have another adjustment. We are 88% of the way through the epoch. It may actually be that adjusted the day that this podcast comes out, but we're looking to basically take it all back on the difficulty side. It's estimated right now at 7.33%. But again, we still have 10% of the epoch to go here. But yeah, embrace it while we can. The fee environment is still not much to talk about. There's not much going on in the mempool. I mean, we're at 1% fees. Your lowest of sats per VByte transactions are probably clearing.
Do you have any color to add here, Ben? From what you've seen on the outside?
Yeah, totally. I mean, I guess the good news, obviously, as Matt touched on, is all-time high Bitcoin price, back to $60 hash price, first time since February before the kind of tariff kickoff. I think February 3rd was the last time we were above $60 hash price, which was the same day as kind of the first round of announcements. The bad news, though, is the difficulty adjustment. But the good caveat is that 7% down, the way the math works is 7% down, and then 7% up will actually end up just a little bit below where we were before. So it won't take it all back. Most likely, if this is where we end up hanging out, there'll still be about a 25 cent to $1 little extra juice that miners will have for the next epoch if we stick around here. And looking like there'll be quite a bit of at least in the forecast, some curtailment in the afternoons in Texas. So we might see that come down a bit. But of course, predicting the weather is very tough.
You literally said that like it was a weather prediction. In the afternoon, we're expecting a little curtailment. I love that. Yeah, there hasn't been too much in the fee market right now. I mean, I think year over year, we're just going to continue to see it drop at the moment. So that's kind of rough. Go over to Bitcoin Season 2 if you want to learn about inventive and interesting ways to boost Bitcoin fees.
Go pester your friendly neighborhood JPEGer and tell them to start minting more schlop for the blockchain so that miners can actually eat for once. I mean,
more schlop.
It is schlop, but $60 per petahash per day. It's really funny when you put that in context because that's like, I think, $5 above the all-time low for the last cycle. Obviously, there's more efficient machines now, so your margins are larger, but it's tough. It's tough out there. It's nice to see it back above above 60 and above 55, though. We've been pretty low in the dog days recently this summer with just how relentless difficulty has been. But we'll touch on this during your segment too, Ben. I think that hash rate, at least from where I'm standing, it's been more sluggish this year than I thought it would be, which is good. But before we get to that, let's go ahead and jump on over to the biggest news, I think, of the year, at least in terms of Bitcoin miners and public Bitcoin mining markets. And that's the CoreWeave CORZ acquisition deal. So this news hit this week. At the beginning of the week, hot, right out of the gate on Monday. And this is something that we knew was going to happen, or at least we knew rumblings about it. The Wall Street Journal had a scoop a while back that it was leaked to them that these talks were ongoing. And now we have some details for the deal. So it's going to be an all-stock deal. It's valued at approximately $9 billion. The transaction, I'm quoting from our piece here on Blockspace, based on a fixed exchange ratio of 0.1235 CoreWeave shares for Core Scientific shares, represents a 66% premium to Core Scientific's pre-announced share price and is expected to close in Q4 2025. So that's about, for every share of Core Scientific shareholders get an eighth of CoreWeave shares. Now, this prices it at roughly $20.40 per share at the time of the announcement. Now, Core Scientific took a huge hit following this. So I think Core Scientific shareholders were a little bit disappointed about the terms. CoreWeave did not really react much. It maybe fell a few percentage points, but nothing really outside of the, I think, range of normal volatility for a stock like that. And just to go over a few other details from the news, the buyout would entitle CoreWeave to 1.3 gigawatts of power capacity. Roughly 850 megawatts of those are slated for HPC and AI. Only 590 of those are the ones that Core Scientific and CoreWeave had in their original agreement or their expanded agreements, because they had multiple ones that they signed over the year. And there is an additional on top of that 590 for a total of 850 potential for AI and HPC. But there's 500 megawatts of Bitcoin mining capacity that's, you can't really imagine CoreWeave doing much with except for maybe selling off to the highest bidder. So that's the highlight of the news. I want to throw it over to y'all for any second takes or thoughts on this.
I'm going to grab it. If you're watching on YouTube, CoinDesk TV, elsewhere, you can see the CORZ chart that I threw up on the screen. We're trading about 1327 as of this morning, which is not fantastic, where we started the week at $18. Of course, there was a price premium that arose when people were looking at the predictions. There was a few quotes out there as high as $30+ for the trade price there, but ended up being about $20. And then as we're actually going to put out a piece in a little bit talking about this, the price went down quite a bit after this announcement from $20 because there's an arbitrage here. Basically, what you're doing when you buy Core Scientific now is you're buying cheaper exposure to CoreWeave. And not exactly what people want right now. Bitcoin's ripping towards all-time high. And, the AI trade, I think, is very contingent on tariffs and the questions around importation and usage of new GPUs. So Core Scientific has really tied itself at the hip over the next few months as this transaction closes. It's expected to close in Q4. It's tied itself to the hip to the AI game and specifically CoreWeave. And I think that's made a lot of investors unhappy. At the same time, we could pull this other charts up. We've had really strong gains for Bitcoin mining stocks this week because they trade as a beta play to Bitcoin. Core Scientific has not experienced that this week. So we've had a bunch of disgruntled shareholders post that. And I just want to open up the question to the floor. Do you think this was a good deal for shareholders? Do you think that this made sense? I can see arguments both sides. I think the people I've talked to so far have been more on the negative side. Any takers for the story?
I think if you look at it just on the face value of the deal, you read all the details, you may have a bit of a negative perception of the deal, and I get that. But like for me, like, you know, being we follow this industry very closely on this podcast, I read about this as just a massive success for Core Scientific. I mean, I don't know if you guys remember when they were going through bankruptcy restructuring, people thought it was the end of Core Scientific. Like, people didn't think that they were actually going to come out of that. This is a deep bear market. But here they are, you know, not 5 years later, getting acquired for $9 billion, having also rejected an offer from CoreWeave last year at, you said, what, this was $20 a share, right? Buyout. Back then, I think it was between $5 and $6 a share, right? So this is 1 year later and 4 times, you know, the per share, and I'm sure their share count's gone up. So I don't know what the you guys may have the number on that, the actual valuation from last year. But you think about that, they were really the first ones to, I feel like, just plunge fully in the deep end on AI conversion, and you know, everyone's kind of followed suit. It paid out big time for them. You know, they have 200 to 500 employees, $9 billion valuation. Like, that's, I would commend the team for getting them out of bankruptcy, knowing their worth, rejecting the offer, and then getting to this point. I know some stockholders out there may feel like they could have held out for better, but I can't blame them for taking this deal at all. I don't know what you guys think. Maybe that's
I'll add one thing. So it was a $1 billion offer in 2024, and you know, they've worked into a $9 billion offer a year later. So, you know, by any regard, that is a really nice number to see. The thing that I've noticed mostly that people are getting frustrated about is that there wasn't any price protection if CoreWeave went down, right? So this is trading again based on CoreWeave. You're basically in a derivative or price exposure to CoreWeave as a Core Scientific bag holder. And if CoreWeave goes down while the transaction's happening, like, it just hurts more for Core Sci holders, especially right now. Like, max pain is Bitcoin rips, the AI trade goes down, and Core Sci bag holders are stuck, like tethered to the hip to CoreWeave. And so far, that's kind of what's been happening over the last week. Now, this is going to take months for this to occur. One other angle, not to hog the podium here, is like, what if there's another buyout offer from another neo cloud that comes in during this time period that's better than the $9 billion? Could that be engaged with? You have to look at the finer details of the engagement between CoreWeave and Core Scientific, which I do believe are public. But I would be interested to think about that, because Core Scientific obviously has some really nice assets that were worth paying $9 billion for.
I could jump in here, Colin, but I mean, I take the long-term view on this as well. I know, in the short-term, markets can get pretty in the details, which is what they need to do. But long-term, the story here to me is the turnaround the last 2 to 3 years, and just kudos to the management team over there, and then as well a continuation of the move of Bitcoin miners into other parts of computing. Right? I think it's proving out the thesis that data center operators are, commodity producers of the 21st, 22nd century. Really, what they're doing is they're chasing the highest dollar per megawatt, and right now that's in the AI HPC space. And I think over time you'll see lots of data centers kind of just chasing that higher dollar per megawatt, and then bringing those risk adjusted numbers closer together. Because over a long period of time, we shouldn't expect huge differentials in different type of computing, because you'd expect data center operators to move their operations into that type of computing. So I think you're seeing that bear out in real life.
I think that about does it for that. There's nothing else really for me to add, other than maybe one thing about whether or not Core Scientific could find another buyer for these sites. I think the fact that they're taking an all stock deal and they're kind of trying to rush to get a deal done indicates that they probably are not really bullish on the prospect of that, right? Because there's this kind of strange middle that CoreWeave is in, where they're not a traditional hyperscaler. They're a neo cloud company. They are scrappier. They are more nimble. And they're also not mired in all of the kind of bureaucracy that comes with being a multi-trillion-dollar company like a Microsoft, right? So I don't think that Core Scientific would ever be an acquisition target for those companies. But for CoreWeave, they're just big enough and they're just serious enough to where it will make sense.
Is Bitcoin's most active scaling solution already here? Fractal Bitcoin's rapid hash rate growth and transaction volume suggests it might be. Today, close to 80% of Bitcoin's hash rate is merge mined and securing Fractal Bitcoin. What's more, Fractal processes over 11 million transactions daily, which is on par with the most active chains in the crypto space. Get the full scoop in our new report on Fractal Bitcoin. Explore its innovative cadence mining mechanism, emerging ecosystem of applications, and why Fractal Bitcoin is becoming Bitcoin's go-to innovation layer. Download the full report by accessing the link in the description below.
What exactly is IREN doing with buying all of these Nvidia GPUs? Will, do you want to take this one away?
I do want to take this one away. Let's pull up a chart as well. I'll throw that up in a second after we kind of read through this piece. But the biggest news this week, besides the Core Scientific CoreWeave story, which dropped on Monday, was IREN's decision to purchase 2,400 Nvidia Blackwell GPUs. This is the new leading shiny toy from Nvidia, and they paid, again, $130 million for this order. They purchased this from a cash balance of the company. The company had just previously to this done a $550 million convertible note. So that's ostensibly where the money came from, though, to quote the famous SBF, dollars are typically fungible. So it could come from a different few sources. This one made a lot of people in the IREN camp extremely happy to see them start purchasing GPUs. And the play here, I think, if you're on team IREN, so to speak, is that IREN is, yes, building out multiple data centers. Some of them have Bitcoin mining, and they're using the Bitcoin mining operations in order to fund the GPU growth. And they're pursuing this PowerShell model where someone can come in and start deploying GPUs into the power that IREN has already secured and built infrastructure around. But they also have the optionality by purchasing GPUs, especially these Blackwells, to be in Neo Cloud themselves and start servicing different AI players who need capacity. So the optionality there, I think, is interesting to a lot of people who are bag holders or investors in IREN. Now, the flip side, of course, is, did they just go long GPUs without any person on the other side? Like, is there a contract lined up for anyone to use this? Or are they just going to sell it into like the generalized market for compute right now? Like, find whoever on like rolling contracts and make it work. And I think paired with the fact that we still don't really know who's going to be like the longer term contract with IREN, there's some skepticism warranted about this. That being said, they're able to fulfill the order using cash on the balance sheet, so it doesn't necessarily like hurt their economics. And they also continue to trudge forward with Bitcoin mining deployments. They got over 50 exahash. They're going to get to 52 exahash, and they have the leading efficiency out of any Bitcoin miner out there. They're producing Bitcoin for, I believe, under $30,000 per coin. So as Bitcoin goes up, that trade only gets better. And ostensibly, they can continue to pay for their operations, or a large portion of their operations, with the Bitcoin mining. So that's the gist there. Let me pull up this chart, which I'll add to stage. So yeah, so far it's been pretty good. Like, it's been a good time to be an IREN investor. You're pretty happy. Anyways, let's look at the 1 month chart over here on TradingView. It's trading right now at 1766. A month ago, it was trading at 988. So, it's been a pretty awesome time for them. Not too much to add on there. I don't have any current information about their ATM program, which I think is always relevant when looking at this stock. I think the most recent sort of big funding they did with the convertible note, I know they had some ATM action in Q1, but yeah, that's pretty handsome chart there. Any thoughts on this story, guys?
Is this the AI equivalent of buying a bunch of hash rate back in 2021 and then your stock price explodes, or announcing a purchasing order? Because unless I'm missing something, and maybe there are insiders who know that there is a deal being inked currently, it'd be kind of strange if IREN bought all of these and they didn't have a deal, under contract, or at least getting close to it. But I don't really know why the market wouldn't necessarily value this on par with something like
Galaxy or Core Scientific or Applied Digital's contracts with CoreWeave. Because the thing that I keep coming back to with what IREN is trying to do here is they're taking a much different approach to the AI cash cow than some of their peers, right? I mean, Core Scientific, Galaxy, these companies are going pure infrastructure plays. And they're saying, we're just going to provide the infrastructure. You can come and host your GPUs here, and then you just deal with all of the other stuff that goes with that. And we will just charge you for the megawatts that you are consuming. And then you have other companies like Bit Digital that went out and acquired data centers. That was the Innovum deal Bit Digital executed, I believe, in the last year. And with that comes staff who knows how to run these things. Conceivably, there are contracts that already existed for that business. But as far as I can tell with IREN, they're like trying to throw anything at the wall and see what sticks. They're trying, they say that they're going to build out this like 2 gigawatt facility in Sweetwater, Texas. Now they're buying more machines. They already have machines online that they've used to book AI revenue, and they're trying to expand that. And I would just, if I were an IREN investor, unless they're like just all supermen on the IREN team, I'm a little bit worried about the fact that not only do you have to build and retrofit the infrastructure to house these things, but now you also have to install the machines themselves and then go out and do business development to get clients for that compute, unless they're going to outsource it somehow. It seems like a lot of moving parts, and I could be totally mid-curving it here, and this pays off, and IREN does end up becoming a neo cloud company or a hyperscaler, right? Like Mike Alfred had that tweet about what people don't realize is IREN's becoming a hyperscaler. It's like, okay, easier said than done with 4,300 GPUs in your portfolio. That's just my first take on it.
You guys hit this from every angle. It's like you read my notes. What am I supposed to say here? I think we should move on to grill Ben about curtailment.
Okay, but what notes did you bring to the table, Matt? Can you hold them up for the camera to see?
I can't do it. They're all digital. I can't do that.
Yeah, let's go to curtailment.
All right. 2-part questions here. First, I wanted just a brief takeaway from you on the state of Bitcoin transaction fees, what you think is going on as to why they're so low, besides obviously not that many people are using the chain. I mean, we wrote a newsletter about this a while ago, or a few weeks ago, about some of the things at play here. But what's going on with transaction fees? What are y'all seeing? And what is your research kind of divined to you?
Yeah, so would obviously encourage all your listeners to check out your piece, because I think you hit a lot of the main themes in that, right? Bigger change from 2021, some software upgrades. I think you highlighted SegWit. Now that's a longer term play, more data efficient usage. Of course, there's things that create demand for transactions off chain, like the ETFs, that have caused probably a lot of trading activity to be done on a fiat paper as opposed to directly on chain. But just, lower number of transactions, less things in the mempool, lower volume of transactions. It's hard to take one of those variables and say what is going on for sure and what's causing it. But the numbers are that it's a transaction fee bear market. In a BTC denominated basis, it's kind of incredible. Last month, fees were about 3 sats per VByte average, and we haven't had an average that low since March 2012 on a monthly average basis, which is kind of a crazy statistic. Now, March
2012, that's not March 2021, everyone. That's March 2012.
Yeah. Now that's
Wow.
BTC denominated basis. And of course, everything tends to go down in price in Bitcoin denominated price over time. The story is not quite as bad in USD terms, right? Because those are kind of the two functions for fees is on the mining side for your revenue. It's how much Bitcoin are the fees producing, but then of course, what is the price of those? So the USD price being at an all-time high is helping fees a little bit on a US dollar basis. We're sitting kind of, if you go back to 2017, you're looking at like kind of 60% of the months we've had higher fees, about 40% of the months we've had lower fees on a USD basis. We did have more fees in June on a USD basis than March, of course, because of that BTC price appreciation. But like the story is that it's grim for fees. I guess the positive side is we're so close to zero, you can't go down much more. So there's lots of upside.
It's funny you bring up 2017, because I remember in 2018, a dominant narrative was we need to get all these exchanges to be batching. The fees are too high. It's unfair. We need SegWit adoption. And look at us now. It's like everyone has flown to custodians. As you said, trading is often off chain, and the fees are as dry as they can be. It is wild.
But it's kind of fundamental to the market structure a little bit. So it's very much like a congestion market. You have a certain amount of block space that's fixed. And so the price of that market, which is the transaction fee, is really driven by demand, which can come and go. And so you tend to see these two states, like very low activity, low volatility, or high activity, high volatility, and not a lot of like in between states. And so, yeah, the story is always when the fees are high, it's, nobody wants to use Bitcoin because you can't send anything. Of course, the miners are all happy, but now we're on the flip side of the story. Fees are too low and everyone's, is worried about security budget and all that kind of stuff. I don't try to read too much into those stories. I just think that's a function of a market with a fixed supply where demand is what drives the price.
So a lot of variables for miners and hash rate traders to juggle, as always. And we're going to get into one of the biggest ones of the year here in a second. Just for some context for people, though. So Ben is a key member of Luxor's derivative desk, where they offer non-deliverable forwards and deliverable forwards for what are essentially hash rate contracts, where you're trading on the price of hash. You're trading hash price, and the contracts are settled in either BTC or USD. Miners love these because it allows them to lock in revenue. There are other people who just want to play the market, because it's an interesting market to play in. There are a lot of variables, and you can kind of find an edge if you know where to look. And one of those edges is, I think, weather patterns, as we've seen increasingly. So I'm curious, Ben, to open the conversation, are some of the hash rate traders getting more and more sophisticated when they view, things like peak heat in July and August when they're looking at some of these contracts? What are y'all seeing in your books currently?
The answer is yes. I started Luxor about 3 years ago, and since that time, we've seen the level of sophistication in the mining industry grow, exponentially. First, it was on the power side, or I say first it was on the crypto side, seeing a lot of these companies having, they, of course, part of their operations have to sell some crypto to pay salaries. Then it was onto the power side. And I think now you're seeing that the hash rate side, and those three metrics, their treasury, their costs, and their revenue are really where these companies are focused in terms of the markets and how they manage that financial risk. And then in terms of the particular of this summer, typically what goes on though is it's not as much the seasonality, though that plays a part. It's harder to run machines in the heat. The prices tend to be a little bit higher in the heat. But what is actually really driving a lot of the summer seasonality, at least since the China mining ban, is a peculiarity of the Texas electricity market called 4CP, which I think your listeners are probably a little bit familiar with. And that is that miners at the peak load of each of those 4 months, if their transmission distribution costs are allocated by how much they're running at those peak loads. So the game as a mining operator is, as you see the grid usage go to its highest point in the month or the day, you need to kind of shut off and come down. So typically on the difficulty side, what we see and what our markets, forecast is that you when you come from May to June and early July, that first 4CP period, you tend to have negative or lower difficulty adjustments than the rest of the year. I think on average during those 4 months, difficulty adjustments are about 0.4% to the upside, whereas they're above 2% for the rest of the year. So you can kind of see it the last 3-4 years since the China mining ban. And it's really that 4CP. Now, we did have some hot weather as well that contributed that big adjustment or that downward adjustment, which was the largest since the China mining ban to the downside. But right now, miners are trying not to run at peak times. But of course, difficulty adjustments are rate over rate changes. And so, the biggest adjustments are when you go from non-4CP to 4CP time period. Now that we're in a 4CP time period and the rest of the summer is a 4CP time period, you probably won't see as aggressive curtailment from the 4CP side. It'll be much more weather dependent. But of course, the economic curtailment does tend to be higher in the winter months than the summer months. But it's the 4CP right now that we're really watching, because that's where almost on a daily basis every mining company in Texas, which is about 17% of the global network, has to make a decision if they're running or not as the grid approaches its peak usage for the day.
I think that was one thing that throwing up grid status here, gridstatus.io for those who are not familiar. Great website to look at some data in the ERCOT market. That's one thing that sort of got lost, I think, in the conversation recently around is Iran mining Bitcoin? Like, did we just accidentally blow up the biggest Bitcoin mine in Asia with our B-2 bombers the other week? Obviously, no, but the Twitter conspiracy theories went pretty crazy, and on LinkedIn as well, which I found out about. It was all about curtailment, and there's probably some like other things mixed in there too, but for the most part, it was curtailment. And I think that a lot of people, when they looked at this initially, were like, we typically only have like build to one 4CP event, but now it's like there seems to be like this rolling moment where miners have to pick over and over again. So can you walk that through a little bit more? I know you just like talked about it for a second there, but I want to like add on to it, get more clarity from past years where there was like seemingly one event where people kind of knew what to do versus now where it's like you have to make a decision. I forget the time period you said, like once a day or multiple times. Like what changed in the 4CP thing? Some context here is I know they're looking at a 12CP event now, and they're considering changing the model as well because it's been gamified a little bit.
Yeah. So what's going on is basically your transmission distribution costs as a miner in Texas are allocated based on your electricity usage at the peak time in those months. And so for the first day of the month, you have your peak load on a specific day, and that's call it the high water mark for the month. So now as a miner, if the grid usage is nowhere near that peak, then you can confidently run and mine that you won't be using electricity and set a new high water mark. As soon as the power price comes up, and we saw this last week, very interesting, electricity prices or electricity usage kind of shot up higher than people expected for the day. And you see this almost cliff drop of about 3 gigawatts that immediately came offline, and not panicked, but was like, this could actually be a 4CP event. This could be a high water mark. I believe it was June 30th, last day of the month, right? So people are like, last day of the market probably won't be a 4CP event, probably won't set a high water mark, but you could see that the market was like, too close for comfort. We can't take that risk. So what really drives it then is the shape of that usage curve, right? So for example, July, the reason we're seeing that huge positive adjustment probably coming is July 1st was the high water mark for the month so far. July 2nd and 3rd were pretty close. So miners were largely curtailing. But then after that point, I don't know whether it's weather or there's been different things going on in Texas, but the usage on the grid has not been nearly as high from like July 4th to July 9th, I guess today. And so, very few miners were curtailing, and that's why you're seeing that hash rate or that difficulty adjustment kind of come back. So it has to do with the shape, right? If every day the high watermark is very close, then miners will need to shut down. Because you just can't take that gamble. The savings from 4CP are too much. But you could have a shape where like the first day of the month is clearly the high water mark, and people are just letting it rip and mining for the rest of the month, like last July. So if you look at last July, there was like a 10% upward adjustment. The 4CP date was July 1st. So later into the month, miners had a ton of confidence that they weren't at that high water mark. That's not how it happened in June this year or last year. It appears to be what's happening in July, but of course, like, these things change. It's just as easily as the weather.
Well, I'll add some color, boots on the ground in Texas. In the last week, there's been a tremendous amount of rain, which has had a bit of a cooling effect. So while it's usually in the 90s to 100 Fahrenheit, it's like 85 degrees today, but it's been between the mid 70s to mid 80s. Little weather report for you.
I was going to ask, you slick back your hair, new gel, or just go outside and get a little rain on your head?
Yeah, like a natural look. So I went outside. I actually just used the hose, though. I'm kind of like shook off a little bit.
Yeah, I was actually curious about that for you, Ben. Like the rain has obviously been a national story, and the tragedy, and our hearts go out to everyone who's been caught up in that. From a mining perspective, and I guess like an energy grid perspective, has there been anything that's notable out of the rainstorms? Typically, we're just talking about like cold and heat.
Yeah,
but curious about that.
No, not that we've seen, at least on our desk. It's typically once it rains, our power trader Haley tells me that the risk of a 4CP event goes down dramatically. So, and that's also what we're seeing in our forward markets. So right now our forward markets are trading in backwardation, which means that the further into the future the contract is, the lower the hash price is for those contracts. And what that tells you is that the market is expecting difficulty to grow faster than Bitcoin price and transaction fees. So just like Matt's weather forecast, the hash rate forward market is also not expecting any extreme weather events. But of course, that can easily change.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin. And I want to go to this next story, which Colin's going to rip on. Bit Digital reallocates 34.5 million BTC to ETH. This is going to work as both our cry corner, I think.
Yeah.
And I think it certainly works that this Bitcoin mining company decided to pivot at the very top of or an all-time high. Before we do that, before I hand it off to you, do note that you can go to blockspace.media and get daily Bitcoin mining coverage now, along with Bitcoin treasuries and other info. We've just expanded a lot of our media coverage into daily articles. Also, check below in the show notes, and there is a Telegram channel that puts out headlines pretty quickly, almost as quick as the pros. We're getting there day by day. So check that out. Colin, throw it up to you.
Yeah, so I'm going to go ahead and swap over to a Bit Digital press release, because the article that Will pulled up, which is helpful context, is when they announced the announcement, they're doing a little Justin Sun prepping of the audience by saying what they're going to do before they actually do it. And this is the one that came out this week. It says Bit Digital shifts entire treasury to Ethereum, becomes one of the largest ETH holders among public companies. So it seems as though Bit Digital sold the rest of its Bitcoin, or maybe, I don't know if it was the rest of it, but they sold at least 280 Bitcoin for purchasing the ETH. They also raised approximately 172 million to buy ETH. So they're doing the MicroStrategy thing, and they're not just selling their Bitcoin holdings. They are going into ETH full bore. They now hold roughly 100,603 ETH, which they will also stake for whatever return the staking pools are offering in Ethereum land right now. I want to also go over to another one that kind of came up just today, which we also covered at Blockspace, which is bit mining. So it's all the public Bitcoin miners. Bit mining is to raise $300 million for Solana treasury strategy. So bit mining announced that it's trying to raise between $200 and $300 million to start a Solana treasury, because if you can't have the first best and you can't have the second best, you might as well go to the third. I don't really have much to say to these other than these are companies that have really been laggards in the Bitcoin mining ecosystem, right? I mean, in the Bitcoin mining market, they haven't really kept up. Bit Digital's kept up more than bit mining, and it has had a pretty decent run with some of its AI and HPC aspirations. Like I said, it recently purchased a data center business. It is kind of totally pivoting into that via a spinoff that's called White Fiber. They're trying to IPO White Fiber, which is their AI and HPC business line. And it seems like Bit Digital wants to then split out the AI business line and then do ETH treasury strategy for the Bit Digital brand going forward. We'll see how that pans out. But for bit mining specifically, it's kind of just like, what has someone not done? Let's try to do that. And that's what I'm kind of getting from the Solana treasury strategy. There are a few out there, but not too many. And I just really question whether or not there's any market appetite for an ETH and Solana treasury company, but maybe I'm wrong.
I've been seeing appetite, like a preference in news items and in the market for ETH. At CoinShares, we've been seeing, like last week, fund flows were higher net basis into ETH than Bitcoin, and given their relative market size, that's pretty significant. But yeah, I mean, there's been a couple of these now corporate ETH treasury companies. Joe Lubin has one, I think. Who's the guy that's been on CNBC for years? Tom Lee, maybe is his name.
Fundstrat guy just announced one, right? Using bit something, another bit something out there buying ETH.
Yeah, and
confusing us.
Those equities like took off right away. I mean, it's interesting that these are both like former Chinese miners that were like affected very much so by the mining ban and like, you know, got out of there very quickly. I think Bit Digital had some Kazakhstan mining at some point. But you know that they're perhaps like, because of how Chinese mining has been historically, like they're you know more apt to basically like switch the way they operate kind of on a dime, where U.S. miners we don't see that as much. So maybe there's something to that to be said there, but I don't know. It's going from Bitcoin to ETH, bold move, Cotton. We'll see if it pays off for him.
Yeah, a few things here. I'll go quick. ETH BTC is almost at all-time low ratio, so that's the price of ETH denominated in BTC, and it continues to trudge downward, not upward. So maybe not the best use of shareholder capital in my book, but you know, they're betting on a very hated rally, and maybe ETH rips. It's still about $2,000, maybe $1,500 away from all-time high, whereas Bitcoin is at all-time high. Second, looking at this chart, this is the bit mining company that pivoted into Solana with its treasury this morning, and it's up about 200%, which is pretty wild. And you know, I think that's the shiny new thing for a lot of these companies that are essentially penny stocks, no interest, no one cares about what they're doing. Pivot, you're the first one to get the press release out, and now their capital base is worth 200% more, and they might be able to go do more with that. Third thing I'll note is just like the revolving chairs, or like the game of musical chairs, I should say, that is being played right now. Bitcoin miners are pivoting to AI HPC. Treasury companies are pivoting into Bitcoin mining, even with Cooler announcing they're mining Bitcoin now. And then we have other Bitcoin mining companies pivoting into Solana and ETH strategies. No one knows what they are anymore. They just know that they have to be relevant and put a press release out that captures imagination. And if you're publicly listed, apparently you get a nice wick candle up. How does this play out, though, is like the big thing. At a certain point, the market does care about the fact that you're earning revenue for your shareholders or earning revenue at all. So I think that this will be, yes, a flash in the pan, fun for a little bit. We'll have some companies acquire a lot of Bitcoin and hype their growth up. But I subscribe more to the doomer or skeptical outlook that a lot of this is just bad functioning companies that should die, and they're adding the hardest money, or in Solana, ETH's case, just like meme coin money, to their balance sheet and able to benefit from it. Ben, any thoughts?
I probably wouldn't go as negative as you guys, but I mean, I do agree with a lot of the points. I mean, I'm a very cash flow focused risk management guy. This doesn't necessarily fit that bill, but of course, I'm not a public company CEO, and it's really hard to argue with the hockey stick graph results. So, sitting on the sideline while their stock price is doubling or doing better is. It's hard to criticize the move, I think, from that front. So I think what I would be watching in the future is, as they pile into these different treasury strategies, are they generating cash flow? Of course, is the first. Is there something the company can do with that treasury that isn't available just for a holder, bypassing the company as it is? And then I think most importantly, when we get to the other side of the cycle is, are they holding enough in treasury to fulfill their obligations? Because of course, if you're holding treasury in one currency and your obligations are in another currency, the market can make that very ugly for your company. So if those are sort of the three things I'd be watching in the market, but hard to argue with the results right now.
Ben reminded me of something I'm going to throw in really quick. Bit Digital has been buying ETH since 2022. So there was kind of some foreshadowing here. Now they plunged into the deep end and said one full on ETH treasury company, but there was some precedent that they were favorable towards that ecosystem. And then you mentioned revenue generating opportunities. The expectation is that these ETH treasury companies will stake, and they will earn staking revenue, and that's a part of the plan. So I don't know.
And the Solana companies will launch tokens on Pump.Fun and earn money from it. Maybe. I got to shrug. Colin, take us home.
That does it for this week, though. Ben, always a pleasure, sir. Really appreciate you hopping on. And for the rest of our listeners, I hope you all have a wonderful weekend. We will see y'all next week. We've got a great episode with Lee Bratcher coming out about the Senate Bill 6 that just passed in Texas, what that exactly means for large loads connecting to ERCOT. And then we will see you all around next week for another news roundup.
Hey, everyone. Colin here. We're running a short survey to get better information on who listens to the show. And we're giving away free block space gear if you fill it out. If you find value in our shows or listen consistently, you can do me a huge favor and fill out the form. It takes about 30 seconds and helps me and the Blockspace team keep the show running. You can find a link to the survey in the show notes. Thanks.